Hey everyone. I was going to chat a little bit today about kind of the state of the market, the real estate market here in Minnesota. I think we've all seen some of the news articles and people talking about kind of the state of our market currently. We have seen prices rapidly declining, largest price drop since 2012. I'm sure it's got, a lot of people out there spooked. And lots of people have asked me, as we are a large size home buyer and seller, how we're navigating it, how we're feeling. It's an interesting time for sure, because the market definitely is shifting. One of the things I had somebody ask me the other day, like, Paul, just like, what is going on? Like, were the indicators there, or was this, did this just come out of nowhere? Like, the market was so good, prices were up for so long. The answer is yes, the indicators were there. I mean, as you've seen, inflation and the battles there. But there's other indicators, across the country, and not just in Minnesota, but, credit card debt's up, student loans in general, debt's up, people's, average savings and bank account balances are down. And then, interest rates have, just haven't gone down at the rate that many of us had hoped, and that just makes it difficult to be a buyer, to be a home buyer. I mean, I think that what we're seeing is a reaction to that the home buyers to actually acquire a home just isn't extremely attractive right now. Having the money for down payments and then looking at the price uptick to actually have a mortgage versus rent, it makes things really tough. And I think we saw glimpses of it coming, at least for the last 12 months. And then as we tipped into 2026, I think it became reality. I mean, and that's one of the things that I think all of us need to kind of wrap our heads around, is that this is reality. In Minnesota, we tend to have a nice uptick in the spring, and we kind of, we hit our peak in the spring, and then we level out, and then we kind of see our drops into the fall and winter, and then we bounce back right up in the spring. It didn't happen this year. So the reality is that we're in and almost through the spring market, and that bounce back didn't happen. So, I mean, I think that, we are where we are, and we're probably now, as you think through where we're heading, we're going to see a dip from where we are today as we head into the fall and winter. So, if you're trying to sell, still the best time to do it, because this is probably the best the market's going to be all year. And then, you continue to watch the indicators as they go into next year and see what happens. I mean, I would not anticipate a huge bounce back in the spring of next year unless we saw some dramatic change in these indicators. But I think, we're past the tipping point of going from a seller's market into a buyer's market, and the correction's going to continue until you get buyers off the sidelines and get them back in and buying. So, where that point will hit, we don't exactly know. You'll see it as it starts to tip back, and you see, more pending sales and things like that. We'll know that we're kind of getting closer to that point. I'm going to talk about two things. Like, what does this mean I'll talk about three things. What does this mean for sellers? What does this mean for buyers? And then what does it mean for investors? Because, the third place is where we primarily play, is in the investment space. So, with sellers, I just think it's realizing that this is reality. Your home's probably going to take a little longer to sell. You're probably going to have to either price very aggressively or be okay with price drops. You're probably going to have to be okay with giving to get to the closing table, whether it's seller contributions, quite a bit of an inspection request, things like that, because as the buyers get, as the balance of power tips, the buyers can make a lot more requests, and we're definitely seeing that. So, I think for sellers, just understand that, the market is not where it was, significantly more challenging. So patience and the ability to accept a little lower price and things is again, the reality of where we are. For buyers, I think, if you have the ability, it's going to continue to go in your favor. You're probably going to be able to get into, some homes are going to fall into price ranges that they weren't before. There's going to be more inventory to choose from. And you're really, you're going to have the ability to kind of pick and choose, and you probably won't be in a lot of, crazy multiple offer situations and things like that there were before. So there is some advantages to the buyers that can hop in and do things in this market. And again, continually watching it to see where prices go. It can be a good time to buy. So, it's just watching that balance of power, and we're definitely tipping into the buyer's market. So, when you think about that, there's advantages to buyers that become disadvantages to sellers, and that's just kind of where we sit today. I think on the investor side, it's an interesting time. I know we have felt the reluctance and some of those things, just as trying to figure out exactly what the market's going to do. It could be a very good time for investors. I think the type of investor that can flourish in an environment like we're in today is the ones that have a little bit more of the ability to hold. I think if you're looking for that, immediate turn, it's going to become more and more difficult. It is difficult now. It's going to continue to be difficult, unless you can buy at significantly lower prices than you were a year or 2 years ago. Turning that quick profit on an investment property is challenging right now. That being said, the ability to purchase as the market tips and hold can lead to a really great real estate investment years down the road. So I think for the investment community, it's really digging into those opportunities, and where you can look at those, acquiring rentals, contract for deed, things that you can do and get these at good prices, but not expect that immediate return. Maybe it's a slower return over multiple years. Look for that payday down the road. I think that's going to be, one of the strongest investment strategies right now. And, I would just say, for the investment community, just, continue to watch the indicators. Buying right will become even more important than it has in the last 10, 15 years. And, just perfecting that strategy, and sticking to it is the long run, is the game plan right now. So, wish we had better news. It is a challenging market, and I think, everyone in Minnesota is feeling it. It's an interesting one because I think we're feeling it on both sides, challenging for sellers. And then there's financial indicators and things that are making it challenging for buyers. And then we've got investors just trying to figure out where the right place to play is. I would say, hold strong. This is a good market, always has been. It'll stabilize, it'll bounce back, and just, keep to what you're doing and be patient, and you'll be just fine. So if anybody, wants to chat more about it, we're always open. We love chatting real estate, and I just wanted to thank you for your time.